Hey everybody, welcome back to Wine Wednesday. I'm Monica.
I'm Josh.
And we are back again with Kyle Baker from VIP Mortgage Group.
Thanks guys, this has been awesome. Love coming on every week, and this is just a great time, and looking forward to doing it more often.
Yeah, it's been great to have you. We are very excited about this one. There's lots of myths when it comes to mortgages and the mortgage process. So we thought we would cover the top 5 mortgage myths. And our wine for today is called Truth Be Told. So we're going to tell some truth today.
Perfect.
Yeah.
Very fitting.
Okay, Kyle, so first myth, big myth. Do I need 20% down to buy a house?
Busted! No, you do not need 20% down. In most cases, I see much less than 20% down.
Yeah.
With a conventional loan, you can go as low as 3% down. And a lot of government-backed options, you can have as low as 0% down. So no, 20% down, busted.
All right, myth number 2. Do I need perfect credit?
Busted. No, you do not need perfect credit. A lot of cases we can go down as low as 500 on a credit score for an FHA loan. Most of the time though, 580 for an FHA loan, 620 for a conventional loan. But by no means do you have to have an 800 credit score to qualify for a great home loan.
All right, myth number 3. I've gotten something in the mail, I've gotten an email that I'm pre-qualified. That's just as good as a pre-approval, right?
No, busted again. No, so again, we've discussed in other episodes the difference between a pre-qualification and a pre-approval. And just by getting something in the mail or filling out an online questionnaire doesn't really mean you are pre-qualified or pre-approved. Again, as we've discussed, going through a pre-approval process, we're going to do a deep dive, go through your individual scenario and make sure that you are truly pre-approved by a mortgage lender. And a lot of times we're going to submit to underwriting prior to you even finding a home.
Myth number 4, will applying for a loan hurt my credit?
No. So it should not hurt your credit to apply for a mortgage loan. Specifically, if you're shopping for a mortgage or shopping for a home, you can have multiple credit pulls throughout a 45-day window. So if you say, hey, I went to my bank and I have a history with them, they're going to take care of me, and they're offering me all these things, but they've already pulled my credit, so I don't want you to pull my credit. I just want you to tell me what you can offer me. Well, the good thing about mortgage credit pulls is that if it's within a 45-day window, that mortgage lenders, like myself, we look at it, and the credit bureaus look at it as one credit pull. The reason for this is back in the day, before the crash, is people felt obligated, like they needed to just, I talked to one guy, he gave me a deal, he pre-approved me, but in reality it was not a good option for them. It was predatory lending. And so we've kind of had that opened up by the CFPB to allow us to really shop for a mortgage and find out whether who I'm working with is the right person for me, or if the loan that I'm applying for is the right loan for me. So, busted again.
Okay. And myth number 5.
Myth number 5.
I have student loans, or I have some significant debt. I probably can't buy a house, right?
No, again, busted. You don't have to be completely debt-free for this to be a deal breaker. So there's ways that we calculate either student loan debt, which is a massive one that we deal with, especially right now. A lot of millennial home buyers, a lot of the young homeowners, millennials starting families. A lot of us carry student loan debt, but it's not a deal breaker. There's ways we can calculate that student loan debt. There's a lot of forgiveness programs that are out there, and you do not need to be completely debt-free to buy a home.
Thank you so much, Kyle. Those were awesome and so helpful. I know we get those questions all the time.
All the time.
Thank you so much for being here again. And I'm Monica.
I'm Josh.
Have a good week. We'll see you next time.
See you guys.
Cheers.
Cheers.